Well, thanks for joining us here on Wednesday. I'm Marlon Bowling with you, your tour guide to the ag commodities, and had some new information just came out just a moment ago. Wanted to relay that to you. It's our new ethanol production numbers for this week. Big change? Not really. Let's take a look here. What did we have last week? Well, we had production of 1.018 million barrels per day. That was a decline of 18,000 barrels a day. 4-week average, it's up 8,000 barrels, not a big change. Ethanol stocks down 700,000 barrels, down to 22.2 million. So that's a positive. And the imports remained at zero. So that's the latest ethanol run. Now let's take a look at our current prices. Let's go to the board and let's take a look at our corn board. Quotes provided by Bar Chart. Well, if you were with us when we came on the air, we had corn sharply lower, and now July corn 2 1/4 higher, now 2 1/2 higher at 6.15, close to the high of the day. December up a penny at 5.52 1/4. About soybeans, well, soybeans on that July contract now 5 3/4 lower at 13.93 1/2, but it's off its low by 13 1/2 cents. And November up a penny at 12.40 1/2. How about that? It's rallied about 15 cents now this morning. Now on the wheat in Chicago, July down 3 3/4 at 6.32 1/2, but it's off of its low by about 7 cents. Extreme choppiness in the grain trade today. July KC wheat down 3 1/4 at the moment. It's at 7.88 1/2. And that's a dime off of its earlier low. In spring wheat trade, you have July now trading a penny 1/4 higher at 8.11. So about anything goes today. It looks like in the cotton market, we'll go with July. It's down 65 points at 82.07. We have Todd Bubba Horowitz with us. Well, we did. We just lost the connection. But anyway, we were going to talk about the impact here on the markets that has been taking place today. A lot of change in the weather forecast, debating weather forecasts and changing models out here. So that's been the theme of the morning. So everything hinges on what happens from one update to the next. By the way, crude oil 53 cents higher, and West Texas crude still under $70 at 69.89 right now. And the dollar, it was sharply lower earlier this morning, and now it's even worse. Down 568 points on the June futures at 102.750 after we had the PPI numbers. I think we have Todd back with us, Todd Bob Horowitz of BubbaTrading.com. And he's in Las Vegas. All right, Todd, extreme choppiness here this morning. I mean, it'll kind of wear you out if you keep looking at the screen. It's almost better to walk away from it for a while.
You know, as we said on the trading floor, Marlon, they're coming back with different owners now. So it's been very wild and very thin, which makes it a problem. I'm assuming that, like every other market, they're going to wait to see what the Federal Reserve does this afternoon at 2 o'clock Eastern. And then what happens in Powell's press conference, because that will have a direct effect on the entire market structure. But they're very wild and very nervous, which indicates, I think, a much bigger move is coming, and that move should probably be higher. It looks like the lows are in.
I would ask you what you thought the Fed would do, but I don't think it matters to either one of us because we don't have any say in it anyway. Anyway, it's like throwing darts. So what's your method of handling a choppy market like this when you're a producer and you're trying to price your crop out there? How do you handle this?
You be hedged, and then you don't have to worry about it. Then all this means nothing but noise, and if you're protected, then you know what your bottom line is, but you know that if the market does explode higher, that you can get more. If you hedge properly, it puts you in a position to always participate on the upside, but know exactly what your losses are to the downside or your exit point is, which is very important because the bottom line is if you're farming, you shouldn't be worried about the day-to-day chop of the market. You should be worried about, taking care of your farm and taking care of your crops.
Are options affordable right now?
They're always affordable. If you know how to use them properly and use the right type of spreading technique that leaves the upside open, instead of the usual, sell a call, buy a put, that doesn't do you any good. That just locks in one price. You have to leave the upside available because certainly as fast as we went down in these markets recently, we could go up just as fast, if not faster. And being able to participate to the upside while controlling your downside risk is the important part.
Good point. I'm glad you brought that up. I appreciate that. All right, Todd, we'll talk with you later. Thanks for the update. Todd Bubba Horowitz of BubbaTrading.com in Las Vegas. We'll come back in a moment. We'll take a look at the livestock sector next.